Both the crypto and the traditional markets are going to be facing a massive 48 hours ahead. And you can see that over here. If you look at the Forex calendar, you have Tuesday CPI year-on-year data, which is coming out. And then tomorrow we have the FOMC statement, which is going to be based around what happened with that CPI rate. And if you look over here, it was previously 4.9%, forecasting now a drop in inflation to 4.1%. And consequently, because of that, what they're looking at is an 83.8% probability that there will be no rate hike at the next rate hike meeting, which is coming up on the 14th of June. So the question is, how is that going to affect markets? Well, traditional markets have been pricing this in for quite some time, and you can see that because they've been moving on up. If you look over here at the S&P 500, since it tested this trend line all the way back on the 24th of May, it's already moved up a amount of 7%, and you can see a deviation above the range over here. So the liquidity zone at 43.2750, that's 4,327.50 cents on the S&P 500 futures. So the reason why I'm showing this over here is because you can expect that at some point very, very soon, there will be a pullback from here. Again, I don't want to call a major meltdown or breakdown with the stock market. It will probably continue to climb what they call the wall of worry, meaning that as bears continue to call for major capitulation, the stock market will more than likely just pull back into this zone and continue to climb up for prolonged periods of time until such time as the Fed ultimately breaks something major within the markets, and that leads to a major meltdown eventually. So if you look over here at the S&P 500 ratio against the M2 money supply, this is a pretty interesting chart because this is also showing that you are coming into major resistance. So could that next pullback be the breakdown? Well, I think it's good to correlate this chart and open up your mind to the possibility that that could be the case. Maybe you'll pull back a little bit over here and then start to mount up one more time, but you can see it as clear as day. Every single time when you tied this to the M2 money supply, you can see strong horizontal level that led to the major tops within the stock market. This was 2007 before the big 08 crash. And then you have over here also in the 2000, the dot-com bubble burst all the way back down. And then you had our December top where the stock market topped out over there and pulled back. And now we're coming into that zone once again. So definitely a very, very important and critical level to watch. I would put this on my chart. I would set an alert if I were you. I'll bring it on the show so you don't have to. You can just come and watch the show every week and I will bring that up. Now, if we look over here at the M2 money supply, this is kind of what it looks like, right? It's been trending down. Maybe I should change the color there for you. Quick free lesson on how to change the color. There you go there, change the line width, and now you got a nice clean line. So you can see it's trended on up for a very, very long period of time. And now we have an inverted yield curve. And consequently, the M2 money supply is coming down. Liquidity is being drawn out of the markets. And this has all been a game of liquidity. That's the big trade of the year, is trading liquidity to liquidity, focusing on range levels for the short time frame. So watch this zone over here. You can draw a trend line. You can see it's still a long way away before it's going to hit that trend line. I don't know, maybe a line of better fit is to take the mean or the average of this M2 money supply and say that it's something like that, somewhere around this level over here. You might get a reversion back into that, but that is a long way away. If you think how badly the markets were knocked, especially in crypto, with just that bit of a dip, imagine if it did have to come all the way down to here. So I do think that the wall of worry continues to climb, as I just said, for the S&P 500 for a little bit longer. Eventually something breaks and then it comes back down. But for the time being, that is what we are pricing in, is a zero interest rate hike, a pause, if you will, and then maybe at a later stage they might raise again. So let's go on to what's happening with the DXY, the dollar index. You can see again, inversely correlated to what the stock market's doing. Stock market is going up and the DXY is coming once again back down below this T1 level. So ultimately your next 48 hours will depict whether this is going to lead to a breakdown or if it's going to hold this level and bounce up once again. So keep an eye out on this. It is an important chart. If you do get a confirmation close below the prior lows over here, which means 103.298 or lower, then you can say most likely, yes, that's going to lead to the continuation down. That's your next lower high within the greater scheme of things. And consequently, maybe crypto will catch a rally. Now, here's a big hopium chart, very keyword, massive hopium chart over here. You have a MACD cross on the monthly time frame, which took place all the way back in 2016. It led to the major breakout over here of Bitcoin. Same thing, MACD cross in 2021 led to the major breakout just after COVID. And then currently we're about to take the same sort of cross, similar pattern at play, but I think it's a big hopium chart. This is really pushing the envelope for the bulls, because over here you had a whole different monetary system, right? This was in the age of money printing. This was also in the age of money printing, expanding economy. Now we're in a contracting economy where they're withdrawing liquidity out of the market. So it is wishful thinking, but I thought, there are bulls out there that want a little bit of comfort and hopium. So I'm giving it to you. Let's take a look at the chart. Here it is. This is on log scale. You can kind of see the way that price is pressing up into that level. And you can see that the stochastic RSI is continuing on the monthly time frame to trend on up. Now, if this can start to get above the 80 mark, that's where you start to see your big moves within the markets. So bulls need to strike soon, because you can see it is starting to become a bit limp and starting to turn over, losing momentum. So bulls will need to find momentum very soon if they want enough to push this through. Now, looking over here as well at the MACD, this is what it's all based off. These were the previous ones, right? The previous crosses that took place. I can zoom in over there. That was the 2016 one, led to a big move. And then we had this one over here, 2019, but then COVID brought it back down. And then you had the ultimate big cross, massive moves up in the MACD. And now we're looking over here at the MACD. The histograms are weakening. So it's moving towards the upside, lightening in color. And then you have the moving averages, which will inevitably cross. You'll likely first see the histogram cross over the 0 line, which would be your first bullish indication before such time as you see those moving averages cross over. Now, this would be assumptive that the macro low is in for Bitcoin at that 15,500-ish level. If this were to play out, you can expect that those lows should not be violated, which means that as a bull, you'd be looking to defend your next high low, which was that 19.5 level. You should not see prices close anywhere below that wick, which was set in from back in, here we go, is it this one over here? This wick that was set from the USDC-D peg at 19.5. There should be no closes below that level if bulls want to keep that hope alive. Okay. Let's look at the weekly chart, continuing to hold above the 21 EMA as well as the 200 EMA. Those are both good signs as long as it continues to do that. There is still hope that this can continue on up. You have your simple trend line over here, resistance areas to contend with. Remember, this is the Gaussian channel. So these are both support levels. Middle of the Gaussian channel coming in at 24,790. You have your diagonal trend line also coming in right around that 25K level. Super important support zone. And then just above, you have resistance from the different EMAs over here. You got the 9 and the 18, the white and the yellow. Then you also have your horizontal at 28,000. Important zone. That was the open and the close that led to this leg down. We need to break above that. And then you got more resistance above, which is the top of the Gaussian channel, 29,000, and then your lucid SARS at 30,000. So definitely more resistance at the moment than there is support for Bitcoin. So make your decisions accordingly with that information. Now, I've got marked out over here again on the 4-day chart, the ultimate box level, which I was looking at as your zone, your entry zone, if you were looking for a buy the dip opportunity. And the ultimate zone came in at 23,907. Now, the reason I wanted to bring this chart up once again is because I have outlined the breakdown level based on the prior 4-day open and close candles over here. This is coming in at currently 25,740. If we start to move below that level again, you might see expansion towards the downside. And I wouldn't be surprised to see something like this, which is why I'm bringing this up, is just to mention to you, if you do see price come down, you might see a bit of a scare where it pushes through that level, but quickly reclaims that zone. Now, this is where you would see big market makers and big players within the market getting their orders filled, because at this point, most people think the bullish case has failed, right? Because you've broken down your important diagonal. You're also breaking below the 618 fib retracement level. If you take from the ultimate low to the top, your 618 comes in at that $23,900 level that I've marked off. So expect that there could be a deeper push through that level reclaim that zone. Most people then retail will sell out over here, and ultimately the big players will have their bags filled, and price will then recapture important zones and likely continue on up from there. Okay, let's have a quick look at total to see if there's any changes. So we are getting a little bit of a bounce off of the prior range low, which is the orange area over here. You can see right around that zone. Expectation would be that it's going to push up into a resistance zone once again, and then most likely at a later stage it's going to reject from that zone and slowly trend down over time. I definitely don't think altcoins are the place to be right now. I still think that it's better off, if you are going to be taking longs, to be taking those within Bitcoin, because most likely the next half of the year, the last 2 quarters, will lead to an altcoin bleed out against Bitcoin. Be very, very careful with what you're hearing over here. I'm saying against Bitcoin. So even if the USD value goes up, I still think Bitcoin is looking like it's going to outperform most of the altcoins, because altcoins have broken against their Bitcoin pairs, very high time frame key structure, and usually that's not something to be taken lightly. You would expect continuation down from those zones. So that is total 3 for you over there. Bitcoin dominance, you can see it is still holding up over here, continuing to consolidate after a big move. That usually leads to yet another leg up. So again, supporting the likeliness that altcoins are not going to outperform Bitcoin for the most part. Of course, guys, there's always going to be a handful of altcoins that will outperform Bitcoin, but that's like picking a needle in a haystack to find out which ones those are going to be. Is very difficult to do, right? I'm actually going to try and create for you tomorrow a chart. I'm going to go sit this afternoon and create a spaghetti chart, is what they call it. And I'm going to try and outline all these different altcoins against the BTC pairing, and we can show what the trend looks like in relation to Bitcoin, and we'll try spot the ones that may actually be strong and in the uptrend. So tune in tomorrow, because tomorrow's show, that's what we're going to be covering. Okay, next you have Ethereum. It is breaking down. So we mentioned over there, look, rejection below the mid-range, coming down. Now it's losing what some people would call the break of resistance and a perfect retest to support. I said I'd be doubtful of that, and you can see it is breaking that down, right? Continuing on down. Your next target is all the way at the bottom over here, the 0.25 within our range. So 0.25 is 25% of the way through the range. If that's the range low, we're coming to the range quarterly, and that is your 0.0624 level on the ETH BTC chart. Okay, then you also have XRP. We have the Hinman documents, which should be released today. So XRP might be something that you want to be watching. Most of the time, it is a buy the rumor, sell the news event. And if you look at this over here, it is coming into resistance. Guys, I know there's a lot of XRP fans out there that have been holding bags for a long period of time. And some of you may have actually made a lot of money, right? If you got into XRP ages ago, then yeah, you probably did pretty well. Let's zoom this chart out over here. XRP. So if you got in 2016, somewhere around there, even 2017, early 2017, you're definitely still significantly up. Let's just say, hypothetically speaking, you got in middle of 2017, in the middle of the year, you would still be up 209%. But you have to identify that, firstly, you are coming into complete resistance over here. You can see this is in relation to Bitcoin, right? If you look at the chart structure, this is basically the same level as Bitcoin hitting that 30K resistance. It's all that underside area over here. And more than likely, there will be a rejection from the zone. You don't just suddenly break out. And even if you do, you can buy back at almost the same level, right? So if you are an XRP fan and you see a major breakout because the court case is won by XRP, then cool, you'll have a huge guard candle towards the upside, but ultimately that candle will get faded back into the top side over here to retest this level of support, and then you can just buy in with a safer entry. So that's my commentary on XRP. All right, you have also over here, if you look at the RENKO chart, resistance, we hit into the resistance over there, 30K resistance, came back down, still calling for this. Let's quickly move the trend line up. Just drag that out a bit. So looking for a retest into this zone, which is 23,900. So lining up with the 0.618 fib retracement level, as well as the diagonal on the high time frames, very, very high confluence area. Same thing as what I said on the other chart. Expect that there could be a break through that level first, then a reclaim, and then that would be your opportunity to go long, right? On the reclaim, you go long at 23,900, and then you're looking for another attempt to crack through all this upside resistance over here. Remember, guys, also when it comes to trading, you have minor levels of support and major levels of support. Now, how do you differentiate between the two? Well, usually the higher time frame and the horizontals are going to be the stronger major levels of support. So if you look at Bitcoin over here, once again, this is a major level of resistance, right? Why is this a major level of resistance? Well, look at what happened historically in the past around these areas on Renko. Price came into that and led to a massive, massive leg up. The bigger the reaction off of the level, the more, the stronger that support or resistance level would be. So this was a very strong level of support. Big, big move up. Came back into that level again. Led to another massive, massive move, pretty much a second bull market within the same cycle. Then you came down, you broke that level, right? Came in to retest it, down, came up. This is actually your first retest of that very, very strong level of what was support, where you'd now expect would become a very strong level of resistance. So you can't expect that you're just going to smash through that on the very, very first attempt. And that's just a quick lesson for you there on support and resistance levels. Okay. Let's move on over here. Price is stuck below the pivot level, but only marginally. There is a possibility that we will recapture the pivot level on Bitcoin, which today is currently in at $26,141. But remember, again, a lot of overhead resistance. You now have the EMAs, which are starting to trend towards the downside, and they're starting to spread. The more they spread away from each other, the stronger the trending move is towards the downside. But support levels, again, I'll remind you, coming to the bottom of the parallel channel to the downside, 23,900. That is still the level I'm watching. Even if Bitcoin does push up from here, and I have reason to believe we're going to push up, right? Remember, yesterday I did give a long trade. We'll cover that as well in today's show. But I have reason to believe you could still push up quite high. You might even push up all the way back into the top of this trend line, which is coming in around that 27,300. And then a rejection off there could still lead into that 23.9 at a later stage. So watch that level over there. What about Ethereum? Ethereum's pivot level is coming in right now at 1,786, so still holding below. You can already see on Ethereum the retest into the 200 exponential moving average, which is the light blue one. You got your dark blue one, which is the 200 MA coming in at 1625. Okay, Bitcoin over here on low time frames. So in relation to what I just said, if you do see a big push up, again, what do you have over here? You have your blue 200 EMA on the 4-hour time frame, which has for this entire move served as quite a lot of resistance ever since you had the death cross and a cross to the downside. You pushed up 50, reject, 50 EMA, reject, reject. Big push up through the 50 and the 200, short-lived into the diagonal trend line, which would be the top of that parallel channel, which I just showed you on the high time frame. Rejection off there, came back down, push into the 200, rejection, big push into the 200, rejection. Same thing over here. Even if you do see a big push up over here, there is a lot of resistance, a lot that needs to be flipped over here. You might see a rejection, 27.6, somewhere around there, and then again, continuation down. Guys, if you appreciate the alpha, which I hope I bring alpha for you, smash the like button. It helps to get the show content out there. And if you're not yet subscribed to the channel, make sure that you do subscribe as well. We are one of the fastest growing channels in the world in crypto, and we try and bring you high alpha content every single day. We have a lot of researchers, a lot of people that help to work and put all of this together for you. So smash the like button and help us get the show content out there. All right. Continuing on with the 4-hour time frame, what I do want to outline as well is you do have the stochastic RSI on the top side over here, which obviously is starting to reach into those prior levels where there was rejections previously. So you can probably put in even a trend line over here and say you have a bit of a trend line regression, right? Look at that trend line regression on the top. If we start to reject from this level, we're also contending with all the resistance, and then you are looking for another sweep down. So ultimately, price is still capped within a range and a downtrending channel, and the best thing to see would be a sweep of that down of the range low into the bottom of the channel, matches up with the diagonal, textbook perfect TA. It would be such a clean retest into this level, a good long scenario over there. Okay. Liquidity is currently stacked both above and below with almost equal magnitude. Right now, 27.5 is the lower side. And then on the top side, you got 26,200. Look at the long to short ratio over here. You got the cumulative liquidation delta on the bottom, all red, right? So there's a lot more liquidity to be taken from the short sellers than there is from the long sellers. So if you see a big push up over here, that should be expected that it's going to just touch that area. As they say, tap that liquidity. We're going to tap that liquidity and then probably revert back in the other direction. So big move up into here and then back down. And yesterday I gave the trade setup over here. I had to bring it up on actual YouTube. There it is. Why this next crypto bounce will be a trap. That was yesterday's show. Because there are some doubters even in this room with me. Can you believe it? Josh doubted that I gave this long, and he's the one that does the show with me right here. So there it is. There's the long trade. Let's go over it again. The long trade, we were looking for a move up into the middle of the Lux Algo signal over here, which is an order block level, coming in at 26,400. So do you see how that lines up with the 50 and 200 EMA on the 4-hour time frame as well? Might see a push up into that level. And then look, I would be looking to TP on this long. At this point, of course, right, you want to take this trade and you want to lock in the profit. So move your stop into the profit. Is that working? Is it too slow? Okay, it's kind of frozen. There we go. Okay, so move your stop loss into profit. I would actually even move it just below. I'm not going to change the tool over here, but if you move it up just below where I've labeled the range low, so 25,800 and I would say $25,801, you can move your stop there. That means that you should keep some profit on the table. You're welcome to also TP half of this now, and it could go higher, guys. It definitely could go higher. You've seen I've outlined the case for why you may go up to about 27,200 level, but ultimately once the liquidity is grabbed, whether it hits this level and rejects or it goes a little bit more, I'm expecting the following leg after that to be a deeper sell-off that's going to sweep the ultimate lows over here. So here's your range, right? Let's just quickly make that a bit smaller. Your range low is currently coming in at 25,400 around those wick lows, and your range high is coming in all the way at the top over here at about $27,250-ish. Okay, let's just let that load. 27,408 is going to be the very, very top of that move. And the bottom of that move is going to be 25,359. And then you do also have a diagonal which supports this, right? Diagonal trend line, which has come down over here. You've broken above that, so which means you're starting to take some of this liquidity from the short sellers. All right. I also wanted to mention that BitGet do still have a trading competition, which is running until the 21st, I think it is, the 21st of this month of June. You can win up to $50,000. And this is one of those exchanges that you can actually sign up to. I think if you're in the US, I don't know if you need to use a VPN for that one. But if you do need to use a VPN, there is also a VPN link here. You get a 30-day money-back guaranteed VPN opportunity where you can check that plan. You get a sign-up bonus on that. And then BitGet is, where's the link for BitGet? BitGet is BitGet here? There it is. You get $8,000 sign-up bonus on BitGet. If you don't have an account over there and you want to participate in that competition, that is where it is. Fred is pulling faces. He looks like a convulsing epileptic. Okay, there's what he ran away now. He got embarrassed. Guys, that brings me to the end. Very, very quick show because to tell you the truth, we need to wait for this economic data to come out before we can make any major decisions. Right now, low time frame, all we can do is focus on the liquidity to liquidity levels. Liquidity is definitely more towards the upside. Stop out the shorts that are currently in the market, which will lead to a big spike back up, right? Because the short sellers need to buy back. They need to close those positions, meaning they're buying into the market again, sends price back up, and then immediately the smart money will flip short over there, and then we're looking for a move back down. That's it. I will see you folks all on tomorrow's video. Have an absolutely stellar day. I appreciate each and every one of you, and that's it from me. Cheers for now.